the little recording on. All right, so I'm just gonna up to now. So on a second there. Up to now, you've done all the formatives. Okay. Now you can
Yeah.
see I was doing some reading over there. Okay. This I okay. We'll speak about this in just a moment because I haven't seen that. I haven't come across this yet in the other pieces or other units. Perhaps because I didn't look far down enough, you know. You just let me
Okay.
something that came through. Okay, so let's quickly have a look. The summative starts on page 14. Okay, because
Wait,
that's what
I can't see anything here.
sorry. Let me just share the screen. I'm sorry. I'm sorry.
Okay,
Sometimes I just forget. Okay, there we go. Better?
let's see. Mine's still loading on my. Okay, better. Yes. Got it.
Okay. All right. So then, as I was saying, so what I have is literally tell me if it matches what you have on your hard copy. So I literally have page up to page 23. That's what I have. So
Yes.
after the blue separator, that's what is
Mm.
that what you have? Okay.
Yes, that's what I have.
Okay, good. Okay, so now the looking at the formative, it is like this one is a lot of practical. In other words, there isn't actually a lot of theoretics like the other ones. So let's go through some so you can see what I mean. Number one, demonstrate an understanding of cost management planning processes and techniques. So
Okay.
the thing is, I unless if you can find a better answer, because I couldn't. Okay, I, uh,
Okay.
I I it started at 8 and then it ended at 21 because it looked like a sum. You had to put a summation for the or you know what the planning process you know the summary of that is, then you know obviously looking at you know just different, like say, different techniques, but you know, again, don't go describe them all in detail. I would look at the headers and then and make things in point form, you understand, in bullets. But that is how I would see that question answered. Okay, because there was no direct, like let's say with the formative, there was no direct answer. Okay. Right, so
Okay.
8 to 21 is where I would find. Okay, so now here starts it starts number two. Develop a cost estimate for a generic, simple to moderately complex project that you can think of. Okay, so 11 to 17, and I gave you. So what I've done is that I have also added a box of templates. You see, from that I found that are really good. They're really great. They're better than the ones I gave you before. Like in this template, this box of templates. Let me just open it up for you so you can actually see what I'm talking about. Second. Um, okay. So beautiful templates, very thorough. You know what I'm saying to you? It's just got some great stuff in there. So from the work breakdown structure, but to risk management templates, to resource plans, we've got schedule. There's schedule and risk plans. There are business objective worksheets and project scope. We have quality management in there. Um, and just think it's a bit slow there. Okay, just give it a second. So many in there. There's close, there's execution control, initiation. There's project charter, procurement, planning, transition. There is budget in there as well, a template for budgets. So I think you're going to find something in there that could help assist you in coming up with an example for number two. So I would again, I would look at, so in the previous SP, I said to you, you know what, please go and do the resource planning and the work breakdown the WBS, okay, for
Okay.
a an event like a staff party, because it's the easiest. It's easy at this point, very easy to jot down all the elements, the work packages. It's quite easy to get realistic costs for vendors. It's not endless. Does that make sense? It's a week to plan it, and a day to execute it, and a day to pay everyone. Do you understand what I'm saying to you? So I
Yes.
would really use the start party again. You understand what I'm saying? Like, now you're carrying on with what you've done before, and you obviously are. You understand what I'm saying to you? Now doing the cost estimation process for this. Okay. So
Okay.
if you haven't done that already, you're going to find this part really difficult, because you can't do
Yeah.
cost estimations without a work breakdown structure. You understand? Like,
Yeah.
you're going to get something. It's going to be wrong. Okay. So the templates are all there. There's from page 11 to 17 to help you out. Okay. Plus, like
Okay.
I say, it must be an actual real world example. Okay.
Okay.
Good. Let's go to number 3. Okay. So there's another. You see, once again, its interpretation or application. Develop a baseline for the project you thought of in the previous activity. Okay. So look, we're doing estimations. The estimations has a process. Okay, which was taught to you in like 2 weeks ago. All right. So you write the cost estimation process, you list them all down. It's quite say in terms of like documentation, it's quite informal, but then you create the project baseline. You understand, document, and that'll be based on your findings and your specific case study that you have in question 2. Okay.
Okay. All right.
Let's keep going. So once again, I'm so sorry for being repetitive. It's not me. It's the questions. Now you have to do a consolidation of information and ensure agreement of the cost management plan of the 2 previous activities. So as much as I looked for a paper, sorry, a page in the book, okay, to help you out with it. The consolidation process is kind of all of that. You know what I'm saying to you? So you would look at, you have your cost baseline, and then you would have the actual action of, let's say, throwing the party, and there were variations. You understand what I'm saying to you? Because while you go through a project, you'll note that it always happens. It's in every project. It's not something unusual that the costs will differ. Do you understand? There's something borrowing from like a wage that has to be paid, which is decided on beforehand. That won't vary, but maybe maybe you plan it 2 months ago, but you saw the cost for food. It changes. You understand? So maybe when you do get to the party, for example, but the week before, the cost for food and drinks and whatever it may have been will have upped in price or dropped in price or whatever it is. And so the money that you're spending, right, will be a little bit different. Okay, so remember, you also have like a little bit of a reserve. Okay, a reserve set in your budget as well, that is assigned for such instances, or something breaks or something that you have to replace or whatever it may be, or I don't know, right? Um, and that's where we'll just perform a consolidation, okay, of all that
Okay.
information ahead. Okay. All right. So
Okay.
that is the assignment. That is sorry, the assessment. That's all I got. That's all I have here. That's 4 of them. Then as I looked further down, okay, I don't know if Tom, have you seen this in the previous ones yet? Have you seen that they are this is the first time I'm seeing it. I could be wrong, where there are tasks and activities. Seen it before?
Yeah.
Was there? Was it?
Oh, these ones. I think it's the first time I'm seeing them also.
Okay, not these specific ones. I'm saying to you in SP2 and SP1. I could, okay, let's just, okay, you know what? Just give me a second. Uh, just give me a second. Let's just get this answered properly. Uh, okay. So I'm gonna go to just SP2 because you see, I haven't ventured further than where it says sign off. You understand? But today, because I was worried about the number of questions that there were. It was kind of short. Even though it's a lot of
Yeah.
I did happen to just continue right to the bottom, and it is the first time that I saw this. Let's just let this open up here. Okay, so let's have a look. My word, work its way through. Okay, so this is SP2. Okay, this is what we're going to talk about anyway tomorrow. Okay, so yeah, you see, I don't. There must be a sign off here. Yeah, you see, it isn't. It isn't there.
No,
This is the
I
first time
think
I'm
it's
seeing
the
it.
first time. Yeah.
Okay. So now the question now remains is whether or not this counts for your POE. I would think
Okay.
that it does, because if it's in your summative, it has to count for your POE. Okay.
Mm,
So
yeah.
let's look at some of them. Brainstorm with the classmates regarding the reports that are submitted to your department. So you have to wait, or you already know, because I mean you work at your work, so you know. List 3
Yeah.
reports to state what they are reporting on. Also mention who these reports are written for, and the frequency of how often you will construct this report. Okay. Right. Then now this is, like I say, we're going to get into a little bit of the accounting. Okay. Give a
Okay.
practical example from the municipal environment on the difference between cash and then accrual accounting. Okay. From the municipal environment. In other words, so you don't have to look at your business. You just have to go and look in a governmental department. Do you understand? And just give me an
Okay.
example of where they spend cash or they receive cash directly, and where they might be accruing certain costs and expenses. Do you understand?
Oh.
Okay. What information as a manager do I require to understand the balances on a departmental budget? Now, I can't give you that answer. Do you understand what I'm saying to you, right? But you
Okay.
you you do need so you do need to go look at those journals. Do you understand? And what information is required to complete the journals effectively, month to month, year to year. You understand? Because
Okay.
that would help you balance the departmental budgets. Okay.
All right.
Yeah. Discuss in your own words the need for a standard chart of account. Okay, so I think it's quite straightforward.
Okay.
Describe in your own words, once again, the difference between the cost price of inventory and its net realizable value, releasable value. Okay. Give an example to support your explanation. I think it's kind of very easy. Okay.
Okay.
Because obviously there's you sell items at you buy items at a certain cost, and there's a certain markup. Do you understand what I'm saying to you? That either you
Okay.
you and your customers will sell it at, and I think it's important that you explain that you're kind of the middleman as well. Do you understand? Because you
Mm,
receive your company receives a lot of goods, and then and also you package and you tweak and you add and you whatever it is, and then you supply to schools or whatever it is. Okay. And so just the variations of how we add value. Okay. Monetary value. Okay. To the pricing of and the cost for these products. Yeah. The
okay.
next one, the next two, I don't want you to panic. It's really, I said to you, there will be minimal accounting. I say in exercises, but this is
Mm,
the next two are actually just calculations. Just note that it's not accounting. I mean, it uses accounting principles, but you don't have to go use a book like a journal. You understand? A ledger, a cash flow journal. You understand what I'm saying? You don't have to use any of these things. You just have to tell me how, for example, in this one, on the 1st of July 2004, the Erkuruleni municipality bought a pool car to be used by officials when attending to official business. The value of the car was 204K and has estimated economic life of 5 years. So that's obviously important. What do you think we're going to be doing? What do you think we're going to, because you know it's depreciation. What do you think we're going to be doing at this point? We got a brand new car. It's born in the new financial year. You understand?
Mm-hmm.
It's on the
Mm-hmm.
1st of July. What are we doing with this? We're deprecating it at, take a guess. It doesn't have
And
to get wrong.
not sure. So the rate of cost is and it's make it come in about. Are we not dividing it by 5?
We are basically dividing it by 5, okay? Because the
Oh,
thing is, you can
okay.
either do it over a division over 5 years, or it will give you a percentage value. You understand I'm saying that, or a
Okay.
rand value that we applied depreciation to, okay? All right, so at the end of
Okay.
the 5 years, the vehicle is not expected to have any residual value. Do you understand? The financial year of the municipality ends on the 30th of June. Hence, I'm saying to that, 1st of July and the 30th of June. Then it says there, because the thing is, like in your theoretics, right, there were two ways of being able to, that's exactly what I just said to you. There's a straight line method, you understand? And then there's a reducing balance method of 40% per annum, okay? Now, the thing is that the one is going to then amount to the fact that it's going to take longer longer or shorter to deprecate. You understand? Because
Yes.
because if we're taking 40% per annum, like we know that this is going to be just over 2.5 years, this thing's going to be done. Does that make sense?
Yeah.
Okay. Says it because it's calculate the annual depreciation charges on the vehicle for each of the 3 years. You see, 3 years. Okay. Um, look at this. This makes no sense. Okay. This, you see this R5, whatever that means. Okay. I would genuinely just go with this date and that date. I don't know what the hell this is. Okay. All right. No idea what this
Okay.
is. Okay, so take that 5 years out. It makes no sense. The rest makes sense. In other words, 3 years, 3 years, 3 years is repeated there. You with me? Okay.
Yeah.
The straight line
Yeah.
method and the reducing balance method of 40% per annum. Very easy calculation. Very easy. The one is, okay, you tell me the answer. The first one is dividing it by, you just said it now. Dividing it by
5.
3. Sorry, 3. Because the thing is, it says 3 years now. Yeah. Okay.
It's
See, 3.
3 years, yes, from
Okay. The other one
2020 till
is,
2007.
yeah. Yes, and the other one is want to be
Are
able to
you
buy.
40%?
Yes, good. Okay, let's get to the last one then. So the
Okay.
last one, do you understand, eh?
Yeah.
Good. Yeah. Okay, so let's look at the last one here. Okay, calculate the interest that needs to be paid on the following account. Very easy. Interest to be paid is so easy. Let's look at that. Account of 20,000 Rand, 5 months overdue, where interest must be paid per month compounded at a 6% penalty fee. So you first have to work out how much the normal interest would have been. You understand? Okay? All right. Should it have been, no, actually, you know what? Let's leave that. Let me just forget I said that. Let's just look at what's in front of us. Okay. So taking that into account, all right, 5 months overdue at 6% penalty fee. Okay. Um, uh, with interest every month compounded. Uh, okay, without giving you the answer, what do you think you would do here? Okay, let me just shut up. You shut up. What do you think you would do here?
Okay, it says account of 20,000, 5 months overdue, where interest must be paid per month, compounded at 6% penalty fee. Uh,
They don't give you enough information for you to make
yeah,
a
they
very
don't.
smart choice. In other words, so
They
just work with
don't.
what you have.
Okay. 5 months over your interest must be paid. Sure. I mean, I think I even forgot what compound interest is.
It's
That
okay.
was like way back in school when I did it. So,
That's okay. So I like the fact that you understand compound interest. Okay.
mm,
Take that under go relook at compound interest, okay? And
okay,
now found
okay,
and now I want the well they want, but I want the full value for 5 months, okay, at 6%
okay,
of compound interest. Okay,
okay,
and you'll be fine. An account of 10,000 Rand overdue by 1 year, where interest is calculated monthly at a penalty rate of 5%.
5%.
Okay. And then it says the question is, under what circumstances may discounts be issued by the public sector entities? Okay. And that I think is quite easy. All you have to do is go to the discounts, go to the discounts part in your manual, and you will see
Okay,
that I know that I know that I said specifically in the lecture that because it's true. I mean, you know, per business and per project, like let's say a vendor is giving me stuff, you understand, right? Then this meeting is going to end in a sec. Then you see they can decide on how much discount they want to give me, and also they'll decide, and it will be a separate amount. Very few people included into the VAT. You understand? So, say again. Do you understand? Because it's kind of,
yeah,
I would say it's kind of illegal to go and put it into the VAT. Do you understand what I'm saying to you? Uh,
yeah,
uh, it doesn't make any. It doesn't for me. I'm not a money person. That's fine, but for me, it doesn't make sense. That counts you would have to count the discounts separately and listed separately. It would then obviously balance to the books quite effectively. Okay. Okay. All right. So that's where we're at. Um, tomorrow we got me and you are gonna chat again. Okay. Uh,
yeah.
yeah, we can you can start with what how far are you now
I haven't completed the formatives. I'm still completing the formative
for
for
three or
this
two?
module,
Oh, for this
module
one.
3.
Okay. Okay.
Yeah.
All right. Okay. Well, good. I mean, that's you're on a good track. You know what I'm saying to you. There's nothing wrong with that.
Okay. Yeah.
Okay. Great stuff.
All right.
Okay. I'm gonna go to the next meeting if anyone comes in.
All
But
right.
I'll see you tomorrow and have a good day. Okay.
Thank you too, Chris.
Okay. Bye. Bye.
Bye.